Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, February 25th, 2022. As always, please don't forget to hit the like button, subscribe to this channel, and share this video with others. Pretty eventful week if you have not been following the news. Obviously, Russia has indeed invaded Ukraine, but we're going to try to concentrate mostly on the technical picture of the stocks and various commodities that we trade. So we're gonna look at the downside target has been achieved. So S&P 500 did indeed touch 4100 as predicted. I'll show you what I mean. The reversal was really incredible, and I'm really hoping that this is pointing to the direction that the Ukrainian war will be short and hopefully will end very soon. I'll show you the stock market of Russia, MOEX, and I think they quote-unquote knew of the invasion back in November. High-yield debt also reversed with a vengeance. I'll show you a very interesting pattern, which is called bullish engulfing. This is actually really good for stocks because junk debt and stocks correlate with one another. Everything spiked, dollar, gold, oil, and natural gas, but that's not a normal relationship, especially with dollar and gold. They usually move the opposite direction, so I think all of them are due for a pullback. And we'll wrap it up with a Bitcoin, which I think is due for more downside. If you are a subscriber, then stay tuned. I'll send a separate email. We're going to cover all of these various stocks, including many gold-related and large cap stocks. If you are not yet a subscriber and want to get these indicators, the green, blue, red, and yellow lines that you can see on this chart, then go over to MasterChartsTrading.com, click on products, and sign up for either trading indicators, newsletter, or better yet, get both of them. It's a killer price. All right, so let's look at S&P 500. We're right now looking at daily charts. And people ask me, what does that mean? What is a daily chart? So a daily chart, where I'm hovering, it says D. You can have charts of various lengths. So you can see that there are those candlesticks here. A red candlestick indicates that the price is dropping. A green candlestick indicates that the price is rising. Really straightforward. So each one of these candlesticks, in this case, on this chart, represents 1 day worth of activity. We can change it. For example, on this chart right here, I have a live chart of S&P 500 a contract for difference, and this is a 5-minute chart. And yes, some people can trade it. On this chart, you can clearly see a breakout right there. And indeed, this would have been a wonderful opportunity to buy yesterday around 1 p.m. New York time. Notice this huge run that still continues, and actually, as we're still open, you can see that we're making new highs for the move. So yes, you can use the indicators on various time frames. Personally, I prefer to trade on daily or weekly time frames. So each one of these candlesticks would be a day in this case. Now notice here, I'm going to zoom in, the red line. So the red line, what does that mean? It's basically caution for me. The stock market was way up here. These are all-time highs, and it pulled back. So it pulled back towards the caution levels. In other words, I still think we're in an uptrend, but I was getting a little worried. So this downside target was predicted. Mostly actually was predicted by market breadth. So let me look at market breadth right now. So right now we're looking at what's called an advanced decline volume line. So in the past I have already explained that the way they construct the advanced decline line. You can look it up. Go to ChartSchool on StockCharts.com. It's not my site, but you can obviously use it, and you can do advanced decline line, and it will tell you how it is calculated. So I'm not making it up. So you can see this is a weekly chart. In other words, each one of these little candlesticks down here, which is S&P 500, is a 1 week's worth of activity. And here what we're having is what we saw was what's called a divergence. Stock market was making higher highs and higher lows, while the advanced decline line, or in this case advanced decline volume line, was making a series of lower lows and lower highs. Finally, at the beginning of this year, 2022, stock market decided to, take a dive. And this divergence started around June, maybe a little bit even earlier. So the lows from that area from May, June was around 4,100, and we exactly touched that level. So I will consider this divergence now have been worked off, because, basically we have touched that area, and we're no longer there's no longer a divergence. We have worked it off. I don't know how to else say it. So this level, 4,100, again, was predicted by market breadth in this case, but also you can see that this is exactly where the support resistance line comes in. So we touched it, around 41, 42, 41.20 or so, that area. We touched it intraday, and it was really scary here on yesterday on 24th of February. Everybody thought it was the end of the world, but something happened and we came in and just it started to reverse. So I'll show you some of the other charts. They are really impressive, especially NASDAQ. As of right now, we're seeing this big move higher. So multiple good things I am seeing here are the following. So this candlestick from the 24th of February is a classic hammer candlestick. So a hammer candlestick has a small, body. Preferably it's green. In other words, the price opened below the close. So that's indeed what happened. Throughout the day, we had a big spike to the downside, but then the bulls, people who think that prices should be higher, started buying. And they started buying, and they kept buying until the end of the session. So multiple good things about it is that this downward movement was stopped, reversed, and then the session ended at the top of the range. So that is a classical hammer candlestick. Excellent bullish candlestick. Additionally, we have a follow-through today with a huge green candlestick. As of right now, we're looking at over 2% gain, which is excellent. Additionally, we're approaching this blue support resistance line. So what I normally do is I wait for a stock to come above, to close above the blue support resistance line. Again, you can find out more about this lines. And then once it does close there, I just buy it there. So we're approaching that line very, rapidly, literally in 2 days. So this is a very strong reversal. What I'm noticing here, despite the horrific news out of Ukraine, we're seeing stock market reverse. So this is a classical case of sell the rumor, buy the news. Literally, people were selling, and then finally, when the news broke that yes, indeed, they're going to invade the entire Ukraine, not just parts of Lugansk and Donetsk, but the entire Ukraine is under attack. So this is once again, we're seeing a battle between greed and fear. So here, when the stock market collapsed here into 24th of February, this was extreme fear, and then greed just took over. People came in and said, prices are excellent, we want to be buying, we're really greedy, we want to see prices go higher. Okay, these emotions are exactly what's driving the stock market, so please, don't assign them to me. This is just the way things are. Looking at Dow Jones, very similar picture. You can see a huge hammer candlestick, even better actually. This is an even better candlestick, an enormous spike to the bottom, and then it was bought out. And then today we had, again, an enormous green candlestick. So this is a classic reversal to the upside. So Dow Jones, again, approaching the buy point. Buy point to me will be 34462. I'm reading it right off the chart. This is my blue support resistance indicator line. NASDAQ is even more impressive. Look at the size of this candlestick from 24th of February. Almost a outside reversal. So an outside reversal would be when yesterday's candlestick is completely engulfed by today's candlestick. It almost happened. But we can actually look on weekly, and most likely, well, not really, no. So if today NASDAQ closes a little bit higher, it would be a bullish engulfing, because in that case, previous week's candlestick would be completely engulfed, or a real body of the candlestick would be completely engulfed by a real body, which is this green part from this week. So NASDAQ also very impressive reversal. Also very close, came within striking distance of a bearish levels. If it closed below this, this is QQQ NASDAQ. If we close below 316, that's game over for NASDAQ. I mean, we're right now still sort of in caution phase, but with this huge reversal, I think we can say that at least the downside has been stopped. Of course, looking at small caps, they started collapsing even earlier. They are indeed still in a bear market. Bear market started right there where it says avoid 18th of January of this year. This is sent to my subscribers. My subscribers were avoiding this at least since then. Right this instant, we're seeing, again, very strong reversal to the upside. We'll see where this takes us. In this case, you can see the small caps actually did touch a new low, I believe. The low was 187.92, and the previous low was 188. So yes, indeed, we did touch the low. So right this instant, what I'm seeing is the picture actually has improved dramatically, and we will believe this picture and take it at face value until something else comes along or a picture will reverse itself. So right now I'm thinking of adding to the position, especially once we close above the blue support resistance line for S&P, which is at 4,400. So let's watch for that. Again, I don't normally look at foreign stocks, especially this thing. This is Moscow Exchange Composite MOEX, but kind of sometimes it's really interesting to look at this, and if a stock market was a live person, didn't know about it on November 19, 2021, because that's what happened. If I was shorting this, if I was trading this exchange, if I was trading this security, then here on November 19th, 2021, I would have shorted it. And I would have been very correct. Obviously, I didn't know anything about, invasion. I was just watching the news with the bellicose talk and all that. But, if the stock market was a live person, then yes, it knew about this, you see? So this is what I like about my support resistance line is the way they indicate this very clearly what it is that's happening. So if you again were trading it back then yes, unequivocally you would have shorted it right there on 19th of November. Obviously, I didn't know anything about potential full invasion of Ukraine by Russia. So that's just aside, I guess. Another really good news is from the junk bond market. So junk bonds completely collapsed. There's the actually the entry into bear market technically was right there in 26th of November, but we had a fake kind of signal right there in December. So then the follow-up signal right there on 18th of January was definitely bearish. and then you can see we had a collapse in the junk debt. So once again, junk debt is important to overall health of stock market because correlations are high. So this is junk debt on monthly charts, and this is a correlation to S&P 500. Notice that most of the time, the correlation is positive. Sometimes the correlation is negative, but by and large, they do the same thing, which is great, because now we can say that we definitely had a reversal right there. This is clearly a bullish engulfing pattern. So what happened is on 23rd of February, the close was right there at 102.99. Then on 24th of February, when the invasion occurred, the junk debt collapsed, but immediately started rising and then closed well above yesterday's level. So not only it closed above yesterday's level, so it basically completely engulfed. You see, this is called a bullish engulfing pattern, also known as outside reversal. Today we had a follow-through. Actually, we had a gap up and a follow-through. So this is a bullish confirmation of a reversal. So what this means to me is that we have multiple good things that are happening for the stock market. We have reversal in the stock market itself and confirmation from the junk debt. So fingers crossed again. The war may be very short, and also what I'm saying is stock market doesn't seem like it's going to be the end of the world as of right this instant, which is good news, obviously. Moving on to various forex commodities that we trade. Here's dollar index DXY. So dollar index is bullish. It broke out here in July of 2021. And then since then, look, notice this upward facing arrows. So yes, we could be buying it there. Again, this is a daily chart, so humans can easily trade on this chart without, losing their mind. Like this is a 5-minute chart, for example. You can go to 15-second chart. It's pretty difficult, but it's not impossible to trade. You can see this opportunity, for example, I would be buying like there. And that would have been correct. But no, 15-second charts are quite difficult to trade. 5-minute charts are reasonable, but more difficult. But daily charts are super easy. You trade once a day. Some people just don't even want to bother. They trade once a week. This is a weekly chart. So yeah, you can just say, okay, I'm going to trade on Friday. That's all I'm going to do. Notice on this chart, this is a 52-week high that was set the day of the invasion, the 24th of February. So dollar and gold normally move in opposite direction. It makes sense. So we're looking right now at XAU divided by US dollar. So if the bottom part of this equation, US dollar, is getting bigger, then it will pull this currency pair lower. But right now, this dollar part of the equation is actually getting bigger, you see, and gold also made a high, you see, so that actually does not make sense. So gold did indeed break out. You can see there was a bunch of several false signals, but finally it found direction. What I'm worried about is this enormous candlestick. So I'm gonna kind of zoom in on that. I'm gonna show it to you in all its glory. So this is a shooting star candlestick. The price spiked up. The bears said, no way, we're not pushing the prices higher, and collapsed the price throughout the day. Actually, it dropped even lower, but then it closed around where it started. Additionally, today we had a follow through to the downside. So not only this is a shooting star candlestick, it's a confirmed shooting star candlestick. What does that mean? In the context of a general bull market in gold, I think we're in a bull market in gold. Latest signal was bullish right there on 10th of February. This is actually a successful trade, clearly. We are going to most likely pull back, or continue to pull back. Now, at the very least, I'm thinking 1863 This is a blue support resistance line, but most likely lower. This is a really big candle. So I would not be surprised if something like this happens. You know, this is a 5% candle. So maybe we'll continue lower. So if that happens, notice where we're gonna continue towards the bearish levels. Red line is a bearish level for forex type of products. So I think gold will continue to pull back. I don't know if dollar will continue to rise. It does make sense, but gold does seem like it needs to pull back some, and it's most likely going to do that. At the very least in the short term. Let's see what happens long term. Notice oil, same general thing. Again, this is a shooting star candlestick right there on 24th of February. So shooting star candlesticks denote tops. Most likely oil has topped out, at least short term. So I would expect a pullback, at least towards $84, possibly lower. Right? This is telling me that the tensions are at least not going to affect the supply chain that much. And again, I'm hoping that the tensions would be short-lived. As far as natural gas is really wild and not for everybody at all. I would not recommend trading natural gas for everybody. So latest signal where I'm hovering right there, 11th of February, was bearish. However, of course, you can see that it was rising throughout this several past days. Notice on the 24th of February what happened. This is again a shooting star candlestick. Additionally, it touched this blue support resistance line and did not close above it. This is resistance, clear resistance. So there's resistance at 4.95. Today again we had a follow through to the downside, so confirmed shooting star candlestick. I would be thinking about selling it short. So this is again showing me that the supply chain, at least perhaps the price will not be affected because of the war. That's my best case assessment. So that's natural gas, and that's again not for the faint of heart. Very volatile, violent kind of security. I definitely don't want to suggest trading this for beginner traders. You need to know what you're doing, and you need to have very strong stomach. All right, and then finishing up, here's Bitcoin. So Bitcoin, we traded it. This is an actual alert. You can see that I wrote here target achieved. I would take some profits and advance my stop to entry. So we sold it short at 43.705. We started covering at 36.251, and let's see if it's gonna collapse lower. So like partially, like I would sell some here, or rather cover some, but most likely this is gonna continue. This is a very bearish pattern. So this is a kind of like inverse cup, and we can do a measured move just for this little tiny pattern. So if this is the pattern I'm referring to right there, so from the top that was happened on 8th of February to the bottom that happened 24th of January, this is a 27% move. We can easily move that much lower. So we're looking at least 27 something like percent move. So I'm thinking at least 2500 here, 25,000, sorry, but most likely lower, because I think Bitcoin actually will collapse possibly to zero one day. And previous video I had, I suggested it might go to negative prices. What do you think? Make a comment. Do you think Bitcoin will go to negative prices? Do you think war will be short-lived? Make a comment. We'll start a discussion. In the meantime, head over to MasterChartsTrading.com, click on products, sign up for one of the products. Again, I have those trading indicators. You can see them on this chart. They're super easy and super helpful. You can predict the price movement. Well, can't really predict the price movement, but you can definitely predict the direction of the movement. And the vast majority of the time, you will be correct. newsletter. I cover many stocks, I cover many commodities, forex, cryptos, lots of optionable stocks as well. You can see that this is the stocks we're gonna cover in the members only video, so stay tuned for that if you're a member. Best thing, of course, is to get both indicators and newsletters at $59.95 per month. It's a steal. So again, sign up at Master Charts Trading. Thanks for watching and have another great trading week. Bye bye.